Hello friends, this is Raj Sastry from Raj Option Trading. Today is November 12, 2022. Hope you're all doing well. In today's segment, we'll take a look at options trading ideas for next week using John Carter's TTM Squeeze indicator. We'll also leverage Tradytics indications to really test this out and see what stocks we can buy and what options play we can do. So with that, let's jump in and get started. Look, we got list of stocks here, and I made sure all these stocks have got nice and high open interest. That tells you these are very liquid in the options market. And also, as you can see here, I made sure all these stocks have got TTM Squeeze indicator by John Carter. As I scan through here, I got a squeeze indicator somewhere down here. I can search for it here. Look, we can just search for squeeze here, and I got the squeeze indicator. Let's keep going here. I got the squeeze indicator here that tells you there is a squeeze. Let's keep going. There's a gamma squeeze, and look, we got the squeeze indicator right here. Look, this is the TTM Squeeze indicator by John Carter. Wherever you see TTM Squeeze indication is true, that means there is a squeeze which is fired for these stocks here. So with that, let's jump in here. Look, top of the list here, we got Apple. Looks like Apple has got a squeeze which is fired. Let's see whether we can go long or short on Apple at these levels here. So with that, I will jump into my favorite platform, Thinkorswim here, to look at Apple. Look, I brought here a Apple's chart here. What you got here is we got a one day chart here, 1 day 1 year chart, and we got a 3-day 3 year chart, and we got a 5-year weekly chart, and we got a 10-year monthly chart, as you can see here. And I got the Bollinger Band plotted here, and also Kelton channel. What we'll do here is we'll look at the TTM Squeeze indicator. As you can see here, what you have to focus on is really the right dot here, the red dot here that tells you there is a squeeze. There is no squeeze in the daily chart. You don't see any dot here. There is no squeeze in the 3-day chart. There is no squeeze in the yearly chart. Weekly chart, but there is a squeeze in the monthly chart here. So with that, let's actually make this bigger here, and basically we can maximize this sell here. Look, we got this big chart here. As you can see here, we got a squeeze in the monthly chart of Apple here. And when the squeeze is happening, that means at this time the Bollinger Band is within the Kelton channel here. That's why we call it a squeeze. So if I add Bollinger Band to this chart here, I can just go in and add study here, or I can go to edit study and say Bollinger Band here. Right here, I can add this here and apply and go. Look, right now, as you can see here, we got the Bollinger Band. Bollinger Band is within the Kelton channel here, and now we have a squeeze or a dot here that tells you at this time Apple stock can have a squeeze. That's what this is indicating. And as you can see here, from a strength perspective, look, these bright green lines are becoming shorter and shorter. That tells you not a great sign here from a short-term perspective. As you can see here, we got red lines here. We got a red line here that tells you Apple is slightly bearish at these levels here. But look, if you look at the TTM wave indicator, what John Carter tells you is really when the wave is above 0, that's a bullish sign here. So according to John Carter, you could buy Apple up here. That's why, look, we got here wave above 0 line here. This is a long-term wave that tells you, hey, you can buy Apple here. But what we got to do is really don't just depend on this indicator. You should always double check with the other indications. What I typically do is when I have to double check these indications, I typically go into my favorite platform, which is Tradytics.com. So look, I got here my Tradytics.com here. I have my Apple stock. As you can see here, I got the option summary. From an option summary perspective, what Tradytics is telling me is really Apple overall it's a bearish right now, and calls to puts is 0.63 here. And we got net premium, again negative net premium, and algorithm flow is bearish. So that tells you, what, right now you cannot go long on Apple. Mainly it's got a bearish overall flow here. And as you can scan through here, I also plotted a quick chart in the Tradytics here. So as you can see, what I've done is I've added some of these gamma exposure levels to this here. Look, whenever you see a whenever you see a red line here, these are the big gamma exposure lines here. What that tells you is really whenever you see these gamma exposure lines, there is a very good indication the stock will get pulled into these levels. Look, we got this level right here around 145. So this 145 level is pretty dominant. We'll look at a little more detail as we go forward. What this tells me is really Apple stock is pinned towards 145 level here. That's a good level. It might hold. So with that, what we'll do is we'll jump in here and look at gamma exposure in a little more detail. So I will take you all the way down here. So look, we got gamma exposure here by Tradytics.com here. Let me go just down here. Look, this is a good gamma exposure chart here. We call it GAX or JAX. Look, right now Apple has got very big gamma exposure right here around 145. As you can see here, if I click on this candle here, it tells you 145. There is a high exposure 0.65. I would ignore these small exposures here up to say 0.2 or something, not a big deal. You could ignore. These are all noise. But the moment you see something above 0.5 line here, these are the bigger exposures. So whenever you see this big exposure like this one right here, that tells you the price is going to be pinned at these levels here. So Apple stock is generally going to be attracted towards this 145 level here because there's a huge gamma exposure at these levels. That's why what I would do is really I would not go long on Apple at this time. Instead, I would rather probably sell a put or you could sell a put under say 145 level, or you could even buy a put at a lower level, so about 140 levels. So that's why I always double check some of these squeeze along with this gamma exposure chart with the Tradytics.com. You could also do one more thing. You could look at the live flow here. It also gives a good indication. Look, I got Apple here which is in the live option flow here. It tells me something similar here. Look, overall flow is bearish and net premium is negative 35.12 million, and more calls, as you can see here, more buys than sells, and there are more OTMs than in the money, and there is about 43% sweep. But as you scan through this here, look, we got a put going on here to bid here. And this what they're doing is really they are really there is a 149 strike price here. It's a sweep, as you can see here, and look, it's at the bid price. That means they may be selling. That's why it's at bid here. This one is probably a positive indication, but we got a few more here. Look, there is a call at ask. Looks like they're also slightly bullish here. But overall, it's a bearish at this time, even though you see some put options at bid, which is bullish, call options at ask, which is again bullish. but you will also see some bearish overall here. Look, we got some some more let's see here, where is the bearish here. We got call at ask, again bullish, put at bid, it's again a bullish play here. But as you scan through here, as you go forward, look, there is a put at ask. Put at ask is really a bearish play here. We got around 44k here. So by summing up all these things here, Tradytics chart is basically telling you, hey, you know what, it's overall bearish, with the net premium is negative 35 million here. That's why, by looking at this option flow, and more importantly, the overall GEX here, or JEX as you call it, that's where I'm not very bullish on Apple at this time here. I would rather be let's see here, where is my Apple option right here. Look, mainly because it's a high gamma exposure around 145. I would not go long at this time. I would probably, I could if I want to go long, I would probably buy a call below 145, or I would even sell a put option below 145 and go from there. So that's about Apple. We'll go into one or two more and conclude. Look, next we got a PBR. PBR is an energy stock, as you know, and there is a lot of geopolitical things going on in Brazil, as many of you know. There is an election, and there is a lot of things going on there. Look, if you look through here, there is a nice and high open interest. It's a very liquid stock, PBR. There's a squeeze. But look here, unlike Apple, as you look through here, from a moving average perspective, it's pretty negative, as you can see here. From a SMA perspective, a PBR has been trending lower, as you can see here. So with that, we can jump in here and go into Thinkorswim platform and bring up PBR. Let me restore here to cells to go back to our old way here, and we can bring up PBR. All right, so let's bring up PBR here, and just to see where the squeeze going on here. Look, PBR also has a monthly squeeze, as you can see here. Nice squeeze at the monthly chart here. So what we can do is, as we know this, we can go in here and maximize the sell here. Look at this monthly chart. Look, same story here, because we got Bollinger Band, which is the red line here on top here, and the purple line here. Bollinger Band is within the curtain channel. That's why it's called squeeze. Look, we got a red dot here indicating there's a squeeze here. And when the squeeze is forming, look, we got here these long-term lines are really blue here. That tells you, hey, you know what, right now it's not the great time to buy PBR, because it's bearish at this time, because the lines are below here. So with this, what you can do is you could go into Tradytics.com here and bring up this stock here, which is PBR, and look at the GEX or gamma exposure levels here. All right, let's let it come through here. Look, we got here a quick stock price and algo flow here. What you could do here is we could bring up the GEX levels right here, and you could say gamma exposure, and you can say here all. So that will bring up the gamma exposure levels here on this chart. Let's see, where is my gamma exposure levels. Looks like it's still thinking. All right, so let's try it one more time here. The gamma exposure, that's good. We want gamma, and we want all here. All right, I think looks like there is nothing much from a gamma exposure level. By looking at the chart here, what I could do is I could go into the actual GEX chart here and see what's going on. Look, we got the GEX levels here. Look, we got PBR. By looking at this chart here, around $12 is the highest GEX level here. And if I go back the chart here, look, stock prices, let's see here, go back here, stock price is right now around say $11-12. Let's go back to this chart here. Look, stock price is about $14 or so here. 11.56 right now, PBR. So what this is telling you, there is a very good gamma exposure level, just at around $12. So this is why price is moving towards 12. 12 is a good level. So by knowing this, I know at these levels here, because stock is below $12 right now, 11.46. There's a good chance that stock can go higher. And you could also look at this exposure by expiration here, gamma exposure by expiration. Look, there's a very high very high gamma exposure at 11.11. Which is already over. 11.18 also we got some exposure, as you can see here. So by knowing this, you could probably ignore John Carter's chart here. You could go into PBR, and you could really buy some call option around say $12 or even below $12, and go long on PBR against the conventional wisdom. All right, now let's jump into next one here. We'll cover one or two more. You get the idea here. Next is Uber. Uber, as many of you know here, a great leader. Dara, he was in Expedia.com earlier. He's a great leader. And look, as you look through here, stock is trying to go higher. Look, stock is slightly going higher after the earnings, as many of you have seen here. And look, from a moving average perspective, stock is nicely going higher. Look, nice uptick from a moving average perspective. Stock is in a bullish trend here. So what we'll do is we'll go back to Thinkorswim platform here. And also, if you see here from an options perspective, let's go back here. From an options perspective, Uber has got, let's see here, from an option open interest perspective, look, there is a nice and high option open interest that tells you it's very liquid in the options market. So with that, let's go back to Thinkorswim platform here. Let me take it, minimize this, restore the cells here, and bring up Uber. All right, so Uber, as you can see here, we got a squeeze right here. Look, the more the merrier. We got two bubbles here that tells you there's a TTM squeeze indication in a in a 3-day chart, as you can see here. So typically when you see a squeeze in a 3-day chart, it can continue for a little longer. Typically a daily squeeze can be there for a couple days. 3-day squeeze can stay for a couple, like 3-day intervals, like 3 days, 6 days, so on and so forth. And as you go towards weekly and monthly, these can stay a little more longer. So with that, what we'll do is we'll basically make this bigger and maximize this here to see what's going on here. Look, in here for Uber, we are in a nice squeeze pattern. We got bunch of these red dots, as you can see here. We got a couple red dots here, and right now, by looking at this chart here, it tells you the long-term wave. We call it, I think it's called probably C wave. It's below zero, according to John Carter. Right now, you should not buy Uber. If these lines are above, then you could buy, but these lines are below zero. According to John Carter, you should not buy Uber at this time. To get a second opinion, I would take you to Tradytics.com, look at the GEX levels, and go from there. All right, so we could bring up here Uber, UBER, and see what's going on here. All right, so Uber overall flow is bullish. We have seen this in the moving average. Calls to puts, again bullish, more calls than puts. That premium is also positive. Algorithmic flow is bullish. As you can see, a lot of bullishness going on here from an IV percentile perspective, pretty low IV percentile. And as you look through the chart here, we could try to bring up our Greek levels here once again and see if it works here. We can say we want gamma, good, and we want all. As you can see here, we got, I think it's a pretty good looking chart. So you have to pay your attention to these red levels here. These red levels are the gamma levels. Price is pulled toward these levels here, and we got green levels here, which are really which are you can think of these red levels as the magnets. Stock is going to move toward these red levels. That's what gamma exposure is telling us. So with that, what we'll do is we'll go back to the GEX chart here and see where are the highest GEX levels here. Look, we got GEX chart here. As you can see here, we got at 30 here, highest gamma exposure. That tells you price is price wants to be pinned around 30 here. So at these levels, because there is a very high gamma exposure at 30, there is a high likelihood that stock will move towards 30, even though currently stock price is let's see here, stock price is around say 20. Let's see here, UBER. I think I got the sticker symbol wrong here. Let's say UBER. Probably okay. We got one squeeze here. As you can see here, this is also negative, like we talked about. So as you can see, price right now is about 29 in Uber. So what this is telling you is really there is a because it's a very high gamma exposure at 30. The price is being pinned at 30 here. So what this tells you is really there's a very good chance that this level can hold, and stock can even can stay at this level for a while and go higher. By knowing this, 30s has got highest gamma exposure. You could really sell some put options below 30, or you could even buy some call options, and because stock is at 30, you could also play some strangles. As example, you could sell some strangles because stock is going to be pinned at 30 level, because that's where the highest gamma exposure level is. All right, so we'll probably look at one or two more. We could also look at quickly live option flow here for the Uber and see what's going on here. All right, let's bring up Uber. Uber overall flow bullish, net premium is positive, more calls than puts, more buys than sells, more OTM. So looks like all positive here. As you look through here, the folks are really, as you can see here, buying the call option. It's a split. It's not a sweep, but split, which is still good. For nice 25k premium here at strike 30, which is where the highest gamma exposure level is. And look, folks are selling put as we expected, knowing that there is a highest gamma at 30. Folks are really selling 29 puts and making some good money here. Look, 38k. And now folks are really taking advantage of these highest gamma levels. And look, somebody is really buying some put at 37.5 strike price here, and they know gamma exposure is highest at 30. If they sell some put option or buy some put option, I mean at 37, because price is going to be pinned at 30, they can really make some good money here, and they're putting about 55k here. So as you can see here, folks are playing around with the gamma exposure levels, which is what savvy traders do in the options market. All right, we'll look at one or two more and probably we'll conclude from here. Look, we got a couple more here. We got Nokia. Nokia, as many of you know, is a dead stock. Did not do much. It looks like there is a high open interest here for Nokia. And as you scan through here, Nokia is turning around. Look, this stock is left for dead for a long time, as many of you know here. But look, Nokia is turning around, as you can see here. And from a moving average perspective, look, Nokia is turning around, as you can see here. Nice, moving average is really telling you this is in a bullish pattern at this time. All right, let's go back to my favorite platform here, Thinkorswim. I will take you back to restoring sales here and look at Nokia. Off late, I've never traded Nokia, but looks like John Carter's TTM Squeeze indication is telling, hey, Nokia can go higher. by looking at this chart here, keep a watch on this area here. Look, we got a red dot here that tells you right now we got a squeeze forming in a monthly chart. Let's go and maximize this sell here. Look, we got Nokia. Look, we got a red dot here, but at the same time, look, we got red lines becoming red bars becoming longer, and we got here long-term waves are below zero. According to John Carter, hey, stay away from Nokia, or if you want, you could short Nokia. That's what John Carter is kind of trying to indicate here. All right, so what we'll also do is we'll get a second opinion from my favorite platform, which is Tradytics. What we'll do is we'll go into the options market here and bring up Nokia and see what's going on in the Nokia. All right, so Nokia may not be too much active, but let's see what we have here. Look, from a Nokia in the options market, it's because it's a very small stock, Tradytics is not even bringing up Nokia here, but looks like overall flow is bullish, as you can see here, but there is nothing. It's a small stock here, so that's why it's not tracked by Tradytics.com, because it's a very small stock. So I would say, probably by looking at this chart here, I would probably stay away from Nokia, mainly because it's below zero levels here. All right, let's look at one or two more here and conclude. So we got a few more here. I know a lot of you are interested in the energy stocks like ET. We'll probably look at one or two here and conclude. So before you go into ET here, I want to look at a little more active stocks here. We got my favorite stocks like ABNB and CRM. We can probably look at those two and conclude, or at least let's look at ABNB and then conclude. So ABNB is one of my favorite stock here, and as you can see here, before I go into details here, go back to Excel spreadsheet. Pretty slow here. Let's go back here. All right, look, Airbnb here. There is a lot of things going on here. I like this industry here. They're doing great. But look what's going on here. Nice option open interest, as you can see here, 721,000. And as you scan through here, stock is trying to go higher. Look, stock is up in 1 day and 5 days. It's telling you it's trying to go higher. And as you look through the moving average here, look, it's also going higher on a moving average basis here. Nice uptick in 5-day moving average. The current price is above 5-day, 10-day and 30-day moving average. That's a good sign here. So with that, I would bring up ABNB here. Let's go back to restore and bring up ABNB. All right, so Airbnb here, look what's going on. Let's see the dots. Look, we got a dot in a 3-day chart here, and we got a dot in a weekly chart. What I would do is I'll probably bring up the weekly chart here and go from there. All right, let's maximize this here. Look, we got weekly chart here, and we got a lot of dots, as you can see here, dot dot dot. And look, we got some slightly above zero line. We got some lines forming, which is green line that tells you it's bullish here. But look, long term here, it's still as you can see here, the line is below zero, but it's turning say light blue. That means it's a positive indication. It can go on the other side and be positive. So with that, if you strictly go by books, what John Carter tells you, don't buy. But let's get a second opinion from Tradytics.com, one of my favorite platform here. So let's bring up ABNB here. All right, so we got ABNB. Overall flow is bullish, good sign. Lot more calls than puts, great sign. Net premium is positive, looks like folks are buying, that's also great. Algorithm flow is bullish. So overall, I think it's a good one here. So what we'll do is we'll bring up these gamma levels here and see what's going on here. All right, let's say gamma levels, and we want all of them. All right, from a gamma level perspective, look, there is no great gamma levels as you can see here. We got some positive gamma level here. Typically, when you see a positive gamma level like this here, that will act as a resistance. So stock will kind of come down from there. That's why you got to be slightly careful with the ABNB here. Looks like we got some resistance level coming up here around say 110 or so here. That's why you got to be careful. Let's go look at the GEX chart here and look at the gamma exposure for Airbnb. Look, from a gamma exposure perspective, as you scan through here, okay, this is an interesting play here. Look, we got around 110 here. There's a nice gamma exposure, about 0.3. I would not say it's great. I would love to see a little higher, but it works. So that's why, around 110 or so, or let's see here, what's this? 110 is a good resistance level here for ABNB. And as you can scan through here, there is not too much gamma exposure for this stock here. There is some at say 130 or so at the higher level here. That's why probably the stock will, according to this indications here, probably the stock will, will be getting some resistance around 110 or so. So that's why if you want to play some options game here, you could sell some, you could buy some put options here if you want to play that, or you could even look at, if you want to go long, you should go long, maybe wait slightly and then look at the when it hits the resistance, it might come down, then you can go longer. So right now, I would not buy this stock at this time. Probably we are kind of going along with the John Carter's indication here. He's also telling you, hey, don't buy at this time. So with that, I will look at one last one here, which is one of my favorite stock, CRM, which is Salesforce.com. All right, let's go back and restore here and bring up CRM, which is Mark Benioff's company. Look, CRM, we got a dot here, which is a squeeze forming in a 3-day chart here. Let's bring up this chart here, maximize this sell here. Look, we got a squeeze forming, as you can see here, and these lines are getting shorter. That tells you it can fire higher. And look, from a longer term perspective, the lines are below zero here. That tells you, according to John Carter, at this time it's not a good time to buy. But what we'll do is we'll get second opinion. Look, also earnings is coming up in 4 days or so. So you got to be slightly careful here. 11:20. It's not 4 days. It's 11:28. It's about a couple days here. All right, let's go back here and to my favorite platform here, Tradytics.com, and bring up CRM, Salesforce.com. All right, so let's bring up here. Look, overall bearish, as you can see here, overall bearish. More put options, transacted than call options. Net premium negative. Looks like it's all bearish at this time. We can bring up these Greek levels here and bring up gamma exposure, which is one of my favorites, and say all. All right, looks like there is not too much gamma exposure levels for this stock here. You can see here we got a big resistance level here. As you can see, these greens will act as resistance. There's a nice resistance level, as you can see here. So it looks like right now there is not too much gamma exposure levels. We can go back down here and look at what's going on in the gamma exposure chart right here. All right, let's bring it up here. All right, we got a gamma exposure right here. Look, we got 140, relatively high gamma exposure, at 140. So 140 will act as a good resistance level. Stock will try to go higher as we go back here. Look, stock price is around say 141 right now. Looks like we got a nice resistance level at 140 here. That's why right now at these levels here, you don't want to go long here on CRM here. You would rather you could rather wait slightly, let it come down, then you can go longer, because 140 is a good resistance level, and right now stock price is at 157. There's a very good chance the stock will come back to 140 or so. That's why you could at these levels you could even buy some put options or a put spread, as you can benefit from price coming down from these levels. So with that, thank you very much. Happy investing and trading. Please subscribe.